Now, how would you look at it, though, if you were back to where you were when we first met and you really couldn't do much scaling in or didn't have the desire to scale in? How would you look at it then? Because I know my answer to that. But what if you couldn't scale in? How would you look at that saying, well, boy, the next major support level is 12 ticks down? Would you even take the trade then at the initial entry area, or would you wait till it gets closer down to that next support level?
I would definitely wait till it gets down to the best support areas. I mean, that's having one, being a one contract trader, you got to make sure that you have multiple support or resistance levels to where you're going to, at least get a good, decent bounce off of it. To take it anywhere sooner than that is, it's you're going to put yourself in a position where you're going to, have to take a loss.
This is something I talk about with you guys all the time in the live trading room. Every single day we talk about that, gang. Okay? If you're sitting here and I guess I'll just have to. We always have new people, so I'll always have to say it till I'm blue in the face. I think until the day I finally shut the room down. I'll probably have to just keep saying it till I'm blue in the face because there'll always be somebody that needs to understand this. Okay. If you're a small contract trader, and only you can make these determinations for yourself, but I always talk about this. Like, here's a speedline continuation trade opportunity here at 118.30 on the Japanese yen. Now, I look at that, and then I say to myself, oh, boy, it's 15 ticks down to the major support. Okay, for me, Rob Hoffman, I say, so what? 15 ticks? I got the 5-minute, the 30-minute. Now, this was a 15-minute chart already. So if I got the 30-minute, the hourly, and the daily going up, I don't care. I'm perfectly okay with that because 15 ticks is nothing if I'm in a great uptrend and have opportunity. So a conservative aggressive trade at the speed line here is nothing. But, and this is not magic, gang. This is common sense as far as I'm concerned. But I know I need to say it for some people because, common sense to one may not be common sense to another, is if I can't scale in and I'm looking for 5 ticks here, but 15 ticks down to the support, I don't take the trade. I don't take the trade if I can't scale in back here, no trade. Okay? And how many times have you guys gone ahead and seen me in the room have a situation where this might be 40, 50 ticks away? I can cover 40 or 50 ticks. But just because I can doesn't mean I should. And so when I start getting to that nosebleed level, as I call it, 40, 50 ticks away from the support, usually you see me do what? Just back off, right? But so going back to this analogy here, if I'm a one contract trader, that's why conservative aggressive entries are, in my opinion, not small contract trader friendly. And very aggressive. And you've heard Lance say what I focused on, Rob, is I focused on trading these retracement trades with my small account so that I was focusing on those where I didn't have to worry about scaling in. But if you take a trade up here, don't be shocked if it goes back to the rising support. See what I'm saying? So, like Pete, in answer to your question, if I were a one contract trader going for 5 ticks, I wouldn't be taking this trade if it was 15 ticks down below the support because I can't get my contract basis down here. And we're going to look at a scaling calculator in just a little bit to understand what it would take. It doesn't take much to get you from here down to here. But the point being is that if you're in a situation where you can't scale, That's why conservative trades, in my opinion, from if I had to start all over again tomorrow, I would go ahead and just focus on taking it closer to support. Because yes, price can even go through the 20 period moving average as well. Okay. Now here's a case where that actually happened. Okay, this was a news related event here, but that's okay either way. I'm okay with it. Went through. I actually, with the trend being up in the background, look at that as an opportunity to go ahead and add into that position. But so you always have a risk down below there. So if I'm a one contract trader, I need to go ahead and mitigate my risk and be as close to major support as possible. Taking trades off of shorter term support, there's a much higher probability of it pulling back to major support than taking a trade off of major support and just having it blindly break through without some sort of major news event in place. Okay, so does that help? If you're a junior trader, ask yourself, if you're a small contract and or junior trader, why in the world would you take a trade up here if your support is down here? This is support, but it's smaller support. Fast and slow speed line support is smaller than a 15-minute 20 period moving average. See what I'm saying? So the point being is, here people are that's junior traders trying to jump into trades they have no business being in because they watch Rob Hoffman make those kind of trades, and they usually work out very fast. And it's a junior trader trying to be like me until they eventually get zinged with the one that retraces against them. And then if they're in that one contract trader mindset, they've got no backup plan. And then they're toast. So rather than ever be toasted, slow, steady growth on retracement trades is what Lance is saying worked for him to help him grow his account to the point where he could start scaling. And I'm sitting there saying, if I had to go and start back all over again, those are more the focuses that I would have to go ahead and allow me to get to the point where I could start doing these kind of trades. But if you're already only in this spot where you can only do one contract, to sit there and get yourself into positions where 5-tick profit versus 15-tick risk, ask yourself, why in the world are you taking the risk in the first place? I sure don't. I just sit there and go ahead then and wait until it retraces. I'm seeing a lot of people saying, very good explanation. Yes, very much so. Yes. Is that making sense to everybody? Lance, from your perspective, did that make sense on your end?
Oh yes, definitely. I mean, that's you being a one contract trader. If you take those trades, I mean, it's there's just you really can't take them. I mean,
no, but you did too. You wanted to be like me when you first came on. That's exactly what you were doing, and then you weren't prepared for this. But then you eventually figured out, oh, I need to wait for this, and that's how I'm going to grow my account. And now you're to the point where you can do these with me because you finally figured out you needed to wait. And that's what I'm trying to impress on other people. I can't tell them where to trade. I can't tell them what to do. Everybody has to make their own decisions. I'm giving them ideas for them to go and test on simulators, for them to go and consult their registered financial representative on. But this is my opinion for my trading, and it seems like you agree with that from your perspective. Michael's saying that's what I did. By the way, Morale, good afternoon to you there. Just seeing you for the first time for the day. Hello to everybody there. Let's see. Yes, that's true, Tom. One contract trader does have a backup plan. It's called going flat or for a loss. That's true. And that's always a risk for a one contract trader. But the problem is, though, Tom, in my perspective, as a person who the problem is, Tom, that doesn't go ahead and build confidence. That's my concern there. It doesn't build confidence. If they just wait for the higher probability trades, they'll be faced far less often with ever having to take the go flat or a loss which will definitely, yeah, no, I know you were. Tom says, I know I was trying to be facetious. Yeah, but I'm trying to explain to them why we're, mentally, psychologically building confidence like Lance did. Like I said, Lance is taking these trades all day long, so to speak, without me now, these retracement trades, okay? And, he feels a sense of mastery over those, and now is sitting there moving on to like the conservative aggressive trades with me and learning how to be more involved with those. So that's okay. Morelia says, I've been here from the beginning, but sitting and taking it all in. By the way, I only take trades off the 20 MA. Speed lines, not for me just yet. Great. So we're hearing from different people how they're perceiving it. Lance, of course, has graduated to the point where he can look at conservative aggressive trades. So that's a transitionary period several of you are in right now. So it's and others that are brand new are still looking at how do I get to that next level. So we're giving you some really good ideas from real traders and their perspectives. All right. Nick says, okay, I'm not taking any more bets on this one. We are going to break the longest presentation record. Well, that's okay. Are you guys having fun? Is this making sense? Are you learning and growing from this? Is it worth going ahead and making this the biggest presentation we've ever done? Because yes, at this rate, we're going to definitely supersede 5.5 hours. All right, excellent. Yeah, no, Steve G, great question. What I was saying was Lance takes them without me. The question was, does Lance take trades I'm not taking? What that answer was, what I'm saying is, like, if I quit for the day or I'm sick for the day, Lance will take these retracement trades. He's mastered them. He's learned from them. He's grown from them. Let's see. We are at. Are we at 2:25 p.m.? Oof. Steve, yeah, we're going to have more than 30 minutes left here, I think, because I haven't even gotten to the scaling calculator yet. So, sorry, I told people to plan on being here all day. And don't worry, I may have you move your 5 o'clock one just to be facetious. No, I'm not going to rush, trust me. I'm definitely not going to rush. There's too many good people here. They have too many good things to learn. And thank you for all the nice comments, game. I just want to go ahead and keep this going. So let's see here. Let's go ahead. I actually want to go back now to the presentation. Let's go to, so that's entry and exit parts 2. Okay, excellent. Let's go ahead now and flip this then. Now that we've talked about this and asking ourselves, why would a one contract trader expose themselves to that risk in the first place versus waiting for the higher probability trade? That's my thoughts on how I would trade if I had to start over. And Lance, well, that is how you got to where you are now. And if I took all your money away, or poor Paris got sick and needed $50,000 worth of surgeries, and you had to give up your money and start all over, my guess is you go right back to my retracement trades and build the account right back all over again. And then 6 months or 9 months from now, start taking conservative aggressive trades just as you are now. Is that right?
And that's exactly what I do, because I mean, it's if you take those other ones, it's not it's not if you get. I mean, it's a matter of when you're going to get zinged by that, and then you're gonna learn at that point.
Yeah, well, you hope, and unfortunately enough, some people are so used to taking losses, they don't understand my perspective, which is losses are unacceptable. Yeah, losses in the real world may ultimately happen, but they don't need to happen like they happen for most traders. I have so many traders coming to me here saying, well, Rob, the last chat room I was in said 30, 40, 50% losses was acceptable. And I'm like, that's madness. That's just basically a bunch of traders who can't trade making up excuses for their poor trading. That's madness. Madness. And like I said, I'm a living example. As of next week here, well, actually four more days. So I guess what the beginning, at the end of this week here, by Friday of this week, I'll be at 9 months without a loss. Knock on wood, if I don't have a loss here in the room in the next couple of days. So, you know, look, I don't think losses, and yet I've made these gorgeous 6-digit net profits. So, you know, um, the bottom line is that I think just saying, oh yeah, we have to take all these losses because that's part of trading. No, I think we should strive for perfection on every trade, and then go from there. So with that said, let's go ahead and move on to the next part of entry exit points. Lance, do you hold overnight?
Never.
Okay. Lance, do you have any, we're not going to discuss what they are, but do you have any long-term core like equity holdings or anything like that? And nothing to do with like your futures, day-to-day trading, like, 401k stuff, any long-term holding stuff out there at all?
I really don't. I mean, it's I've mainly just put my concentration into this. I mean, it seems to work so much better than you know putting my money into any kind of stocks or whatnot.
Okay. And for those of you that don't already know, basically I don't go ahead for I do have long-term core equity holdings in some pharmaceuticals, but overall I do not go ahead and have any of these positions that I take each day, I'm out of before the close of business. It's just that simple. Again, why is that? Well, you know why that is? Like I said, I hate to be such a cheerleader for the book because the book is kind of neat. I just like the way it kind of ended. I think that's about the best part I like about the book, which is, Education of a Speculator, and by Victor Niederhofer. But really, you can read a story just, online. You can read a story in Wikipedia for free. Bottom line is the guy went broke overnight, period. Plain and simple. Okay? When you think you're smarter than the market and you take big bets overnight, you can be rich today and literally broke tomorrow, period. And in this day and age with the currency volatilities, it's just not going to happen, period. So that's my opinion for my trading, and it sounds like that's how Lance feels for his. Okay? That's right. Exactly, Robert. All it takes is a bomb to go off in the wrong spot. You got that, brother. Okay. What are your winning and losing streaks like there? And Lance, you got your answer here, if you want to talk about that a little bit more.
Yeah, it seems like, I mean, there's always inevitably one trade that I'll have each month that I get to learn from, what mistake I made and what I did in the learning process as I continue forward. But it's, that's really about it. I mean, usually, it's usually very limited.
Okay. And you know what? It looks like there was a redundant question in here. It wasn't written exactly the same way, so it escaped the review. I'm sorry. But basically, your average profit per trade, I know you discussed 4 to 5 ticks unless there's a lot of movement. So we won't spend our time on that one because we've already talked about that. As far as those losing trades where you have an opportunity to learn from it, is it a retracement trade usually that you went in and got too aggressive on, or is it a conservative aggressive trade where you're still learning how to trade those? What kind of trades are you usually finding that one a month, and what usually ends up being the source of your mistake?
Yeah, it's never the retracement trades. It's the conservative aggressive trades. Or the very aggressive trades, which I've pretty much eliminated that out of my arsenal at this point in time because I'm just going to put those back and just wait until I grow my account and knowledge to take those trades.
No, I'm sorry, was that very aggressive trades or conservative aggressive?
Very aggressive trades.
Sure.
The conservative aggressive trades. I mean, it's really the only time I've taken a loss on that at this point is trying to get too aggressive and entering two contracts to start with when I should be just using one because I didn't have the ability to scale where I need to scale. So I mean, it's it's always a battle of really just making sure that you have the ability and the account size to do what you need to do when you have you got to take into account to where that next level is down below you if you're going to have enough to get your cost basis down to that point.
Okay, and we're going to talk about, what led you to believe you were wrong then when you took your exits and when you got stopped out then. We'll talk about that in another slide here coming up. So do you trade multiple instruments at the exact time? It looks like you used to, but you don't now. Can you talk a little bit more about that?
Yeah, I've only done it, actually I've only done it one time, and I mean it's, I really didn't care for it, so now I just stay focused on the trade at hand, and if, then I just look at that one, and that's it. I mean, I don't really try to get into more than just what I'm trading at the present time.
Well, and there's a host of reasons that could be a real problem, couldn't it, gang? If you think about it, number one, you're having to split your attention between multiple instruments. That's a problem in itself, isn't it? But even more importantly, what else are you doing? You're splitting your resources, aren't you?
Mm-hmm.
And so where, you might be able to scale in 20, 30, 40, 50 contracts on trade A. You get 2 trades. Now the best you can do is up to 15, 20, 30, whatever the case may be. Bottom line is you're going ahead and you're dividing and getting conquered. And so I think I've done one trade where I was in 2 trades at once in the live trading room. And Lance, I don't know if that was my trade that you were talking about that you were in then in 2 different entries, but I can recall only one time, or that was something you did on your own. But
it was when I was in my own.
Okay, gotcha. And go ahead.
I was in an S&P trade that I was sitting in for ever, and then I did a euro trade while that one was going on, and I mean it's just. Then finally got out of the S&P trade. So I mean, it's just one of those that you're sitting in the S&P.
Oh yeah. Well, gee, where do we hear that one all the time? Yeah, there you go. Nick says just don't take S&P trades. It's easy.
Yeah, exactly.
And I tell you, there's some truth to that sometimes, isn't there? Okay, so you learned your lesson from that, and like I said, in the interest of disclosure, I think I've only done one trade here. That I can recall where I was in 2 different positions at one time as well. So it's like I said, it's not something you're going to be normally seeing. It just happened I had limit orders out there on multiple instruments. I let them both get hit, as I recall, and then I just worked my way out of both positions there. So not something that I go ahead and will normally do either. You're having to do too much at the same time, focus on too many working and moving parts. You need to be instead of a jack of all trades, you need to be a master of one when you're in a trade. You need to have your focus and ask yourself, am I still in that trade at the right time for the right reasons? Or were the reasons I entered that trade changing? And if you're in 2 different instruments, especially 2 different types of instruments, let's say gold and the euro, well, you got 2 totally different challenges that you're facing there at that time as you're trying to make that decision. Okay? So, yeah, that's, for me, that's a no-go. Not trying to be a hero and be in all sorts of different instruments. Most of the time, the people I see that do that are basically adrenaline junkies. They're basically going in carrying multiple positions at multiple times throughout the day to keep the adrenaline flowing. Okay, not because there's necessarily that many great positions simultaneously, and certainly not because they have the equity to do it. It's because they love the thrill of being able to go back and forth. It appeals to like their undiagnosed adult ADD. You understand what I'm saying? So not necessarily good business for me in my trading at a minimum. Okay, and it doesn't sound like for Lance either. All right. Let's go ahead and talk about stop losses here, okay? I know that I can see right away from your very first answer there. I know these things vary on what type of trade you're doing and so on and so forth, but let's see if between these three different answers here and maybe some further discussions on some other charts here, if we can help people kind of understand a little bit about maybe your general philosophy on stops. Is it dollar based? Is it support and resistance level based? Is it percent of account based? I think, if I recall correctly, you're much more focused on if it's just violating the support and resistance levels and so on and so forth, versus absolute dollar, except like that one time when you accidentally got blown out of your account, but that doesn't really count because that wasn't what your intent was to get blown out. You just forgot to raise your stop limit when your account size went up. So in general, what's your theory of stops? Is it when the market changes, absolute dollar value, or percent of account? And then anything else you want to shed just in general at a high level about your theories on stop loss management?
Well, yeah, mine, my stop loss levels are mainly just dependent on the market, really, or if it's really violating the support and resistance levels. It's really, to have a 20 tick stop or something like that. It's just especially if you're planning on or adding in more contracts. It doesn't take a whole lot for it to go against you 20 ticks. So it's for me to put a 20 tick stop or something like that is not really what I'm looking to do. But if it's really violating the support and resistance levels, and then I'd be looking to get out of a trade.
Okay, we're going to go ahead and talk about that a little bit more here as we go into the scaling section too. When people say it doesn't, doesn't take much to go 20 ticks, but that doesn't bother you as much as the support level, resistance levels actually, crumbling. We're going to talk about that more. So your stop losses. Yeah, I guess we can. I tell you what, looks like we've been going almost an hour and a half again. I'm sorry, I guess we did come back at 2:15 Eastern time, so we've been going for about another hour and 25 minutes there. All right, yeah, well, like I said, gang, obviously you guys are having a lot of fun because we're just, get through a lot of great information. So let's do this. Let's go ahead and let me put the clock up here, and why don't we come back at 3:43 Eastern time. 3:43, I'll give you 2 minutes. Let's go. Be back in 2 minutes, gang. Atul, no, I'm back. I'm just waiting for the rest of the crew to come back. I said they've got till 3:43 Eastern, so I'm giving them 5 more seconds. You notice Nick says here, I can tell you've got German blood in you. That's right. This is a fine oil-driven machine here. We're not messing around. We're gonna, I've got a lot. We've had a lot to share, and I'm excited. I've been looking forward to doing this with you guys for months. So